Hi everybody, it's Staceydonadio from Century 21 and Abdel from PRMG, and I have Abdel here today because I wanted to ask him some questions and get his insight on FHA versus conventional. We all know that during the pandemic and really up until about 6 months ago, FHA, it was not even being looked at. I am having more and more success getting my FHA approved buyers accepted offers, but I really wanted Abdel to maybe explain to us why FHA in the past has been looked down on.
Absolutely. So there's a million different loan programs out there. Two of the most common ones that consumers take advantage of is an FHA loan or a conventional loan. Now, both are given by the bank. They're both funded by the bank. The main difference is FHA is insured by HUD, which is the Department of Housing and Urban Development. So essentially, if a consumer doesn't pay, the bank is covered and insured with the Department of Housing and Urban Development. Conventional, there is essentially no insurance except if you put less than 20% down, there's private coverage or private insurance.
Right.
So given that there's essentially the guaranteed insurance with HUD, an appraiser is a little bit more subconscious about the conditions of the property because it has to meet minimum property HUD guidelines.
Peeling paint, loose handrails.
Yep, so you'll see peeling paint, loose handrails is probably the most common. Sidings, the outside.
Screens, right.
I mean, cracks in the foundations, they were a good thing,
right.
But a lot of that stuff. So an appraiser also needs to be approved with certain certifications for FHA too. So not every appraiser can actually conduct an FHA appraisal.
Okay.
So those are usually one of the biggest reasons why a listing agent or sellers would predominantly go for a conventional loan over an FHA loan. Some of the tactics that we usually employ, though, even if you're going with an FHA loan, when we place our offer, I recommend that our buyers assume responsibility for any repairs.
I do it every time.
And that basically puts it at the level field of a conventional loan.
Yeah.
Now, one of the reasons people usually go FHA over conventional is credit score. So credit score for FHA, they allow you as low as really 580, but 620 is the sweet spot for an automated approval. Also a down payment, you can put as low as 3.5% down, and it also allows you to borrow more. So you can actually borrow up to 56.9%, depending on, again, the automated system. Now, conventional also has a special program called a Home Ready program, where you can actually put 3% down. There's actually less than FHA. Wow. You just need to make under what's called the area median income of the specific address. And if you actually make under it, you can get 3%, which basically beats the benefit of an FHA loan.
Yeah.
And then one of the biggest reasons people usually go also with a conventional loan is the mortgage insurance, giving you the ability to get rid of the mortgage insurance. And then,
because FHA is for the lifetime of the loan unless you refinance into conventional.
Yeah. So FHA, if you put 10% down or less, it's for the life. If you put 10% down or more, it actually eliminates it 10 years. 10 years. Conventional, again, if you reach 20% equity, you have the ability to have it removed. The other thing too is conventional though only allows you to borrow generally up to 45% of your debt to income. Okay. And debt to income is basically how much income you make. You divide that by the specific debt, you'll get a percentage. That percentage cannot exceed 45% via conventional and 56% via FHA.
Okay.
So.
All right. Thanks, Abdel.
All right. Thanks, guys.